Hi, Joanne Musa, the tax lien lady here, and today I want to talk to you about what's wrong with tax deed investing. So, what is wrong with tax deed investing? Well, you may have heard that tax deed investing is a great way to purchase properties for back taxes or for pennies on the dollar. Well, there are some problems with tax deed investing, though. Many states are very competitive, and there's a lot of competition at the tax sale. Now, when that happens, the price is bid up, sometimes close to market value. And remember that you need to have all your money at the sale or shortly thereafter, so you don't have time to get financing. And in some states, you don't get clear title to the property. So that's another expense you'll have after the tax sale is clearing the title to the property. Now, here's an example from Alameda County, California, just to show you how high the minimum bid is in this state. California is a very competitive tax deed state. And you can see here are the minimum bids. And the reason why they're so high, that's because in California, there are 3 years of back taxes being sold. You have to be 3 years delinquent before your property is sold at the tax sale. But you can also see that none of these properties went for back taxes. They all went for an extremely higher amount. Okay, you could see here's a property, back taxes were $11,000, and it was sold at the tax sale for close to $92,000. Now here's a property where didn't even get bid at the sale because the back taxes were so high. They were over $100,000. So you could see that it's very competitive. Now the other problem, as we talked about, is the payment. First of all, you have to pay by wire transfer or certified funds at this particular sale. This is an online sale, but many counties do this as well. And you need to pay, in this particular county, you need to pay within 72 hours. In many other states, in many counties, they don't even give you that long. In my state, in Pennsylvania, when I go to a deed sale, I have to pay that day within an hour of the sale. Okay, other states might give you a day after you've been told that you're a successful bidder. But here in California, they give you 72 hours after you've been told that you're the successful bidder. But in addition to the bid amount, you also have to include city and county transfer taxes in your payment. And if the successful bidder defaults, under California state law, appropriate legal action will be taken against the bidder who defaults. And if you default, if you bid on a property and you're awarded the bid and you don't pay, you will be barred from future sales. So that's something that you definitely don't want to do. But the good news is that you can still get tax sale properties for pennies on the dollar. You can avoid the competition at the tax sale, and you can purchase directly from the owner of the property. All right, so how do you do this? What do you look for? Well, when you get the tax sale list of the properties that are going to be in the tax sale, look for out-of-state owners. Another thing that you can look for is vacant properties and houses in need of repair, so that if you're bidding in an area that's close to where you live, actually get in your car, go look at the properties, look for vacant houses, and look for houses in need of repair. Okay, there are certain things that you want to avoid. Because you are buying the property directly from the owner and not at the tax sale, you must check for other liens on the property. Because you are buying it directly from the owner, you would be responsible for any of those liens or judgments or mortgages that may be on the property. So you need to search the property, and if you find any mortgages or judgments or liens on the property, those are properties that you probably do not want to do this with. Okay? All right, so once you contact the owner and you would ask them if they would want to give you the deed to their property, a quit claim deed to you for a nominal fee, for a nominal amount, maybe a couple of $100s for their trouble of signing off the deed to you. Now, why would they do that? There are many reasons why somebody would just give you the deed to their property. Divorce is one reason. Also, relocation. Maybe somebody's been relocated to another state. And remember, they have all those back taxes on the property. But wouldn't it be worth it for you to pay those back taxes and give them a small amount for the deed? After all, you'll still be getting the property for much less than you would if you had to bid on it at the sale. Other reasons include a death in the family. Sometimes these are estate properties and the family members just don't want to be bothered. Plus, they have those back taxes to pay. Job loss. Maybe somebody has lost their job and they can no longer pay for the property. Plus, they can't pay those back taxes. Burnt out landlord. This is another one. Maybe this was not a residence. Maybe this was a rental property and the landlord lives out of state and maybe he's had bad luck with his tenants and doesn't want to be bothered with it anymore. These are just some reasons why someone might give you the deed to their property for a small amount of money. But here's a secret that can explode your tax deed profits. Did you know that there is a little known secret about tax deeds that you can do in some states that will let you cash in on tax deed properties without going to the tax sale? You can find out all about it in my Tax Foreclosure Fortunes mini course. Get your copy at www.taxforeclosurefortunes.com.